Hello, it's Simon Zutshi, and in this video I want to give you a housing market update 2020. Now this is for the UK property market. I've been investing in property in the UK for 25 years. I'm the founder of the Property Investors Network, which is the largest networking organisation in the UK with 50 meetings every single month, founded in 2003. And I'm the author of Property Magic, the Amazon #1 bestseller with over 100,000 copies sold. So why am I doing this video? Well, the property market is changing, and it's really important that you are kept up to date if you want to understand the best opportunities for you in the UK property market. So we've had a crazy 2020, as you will agree. At the beginning, I was thinking that we were going to have a bit of a market crash because there are so many landlords who in January and February were coming to our network meeting saying, hey look, I want to sell up my portfolio because of Section 24. Those are the tax changes that came into place in April 2017. We started to see the real effects of them in January 2019, and then obviously this year, January 2020, and it's going to come in even more in January 2021. So I think that's going to continue, landlords looking to sell up. Then this pandemic happened and everything freezed up. I had one purchase and 3 remortgages going through at the time, and everything stopped for a couple of months. Now, normally in the springtime, there's a bit of a boom in the UK property market and also in the summer. The spring one couldn't happen. When the market opened up again, all estate agents, solicitors, surveyors were all really busy because of all the pent-up demand that stopped literally for 3 months. Then you've got the people who would normally get interested in the springtime. They suddenly came to life, and then the summer boom was slightly delayed as well. So what this meant was actually there was a whole load of activity that was kind of piled up, and then suddenly it all went through, and it gave this sense of a real boom in the market. Then a couple of other things happened. So obviously the government launched lots of initiatives to help people who are struggling financially. They launched the bounce back loans, they launched the CBIL loans as well. So actually there's quite a lot of money floating around, and a lot of people are using that money to buy property. So a little bit of a boom, lots of money available, people are buying property. And then also we have the government who realize that the market's going to crash as a result of this pandemic and the recession. You know, the Bank of England have predicted because of COVID-19 this year, they thought that property prices were going to drop 16% at some point, either 2020 or into 2021 house prices. But it hasn't happened yet. And that's why the government stepped in and introduced, first of all, the stamp duty holiday. They said for properties up to £500,000 in value for up until the end of March 2021, there was no stamp duty. Now, as investors, we still pay the extra 3% surcharge, but people who are first-time buyers or other people buying property, great, they don't have to pay that. That has definitely stimulated the market. And then recently, they also announced bringing out the 95% mortgages to help first-time buyers. These are incentives designed to keep the property market going. Why? Because the property market is really essential in the UK economy. This is why during the lockdown, the government said it's okay for large building sites still to be open. And then when we came out of the lockdown and the government said, right, we need to sort out this recession, Boris did his famous build speech, which was all about that's how the UK government want to help the economy get on the ground by pumping loads of money into development and building projects. And ultimately, we still do not have enough accommodation in the UK. This is why for many years the UK has been a very popular place to invest. We live on a small island, a popular island with an increasing population and a limited amount of accommodation. This means over the long term, property prices and also rents go up. So this is why so many people like investing here. However, we know that the property prices don't always go up. The property market, just like any other market, is cyclical. It comes up and it also comes down. We saw the last crash in 2009. And at that time, it became very difficult to borrow money. It was all because of the global credit crunch. Sellers were desperate to get rid of property. People had bought property that was too expensive in 2007, 2008, property that didn't really stack up, that didn't give positive cash flow. So we had investors who had property that they were subsidizing, came down in value. Sometimes the mortgages were higher than the value, and a lot of them just threw the keys in. Now, this time it's going to be slightly different. Whenever you have a boom, you always have a bust afterwards. And I think because of the recession, we're going to see that commercial property is massively hit. You know, commercial property has always been viewed as a really safe investment. But we've seen, you know, big companies turn around to landlords and say, no, we're not going to pay you in March because they just weren't trading. And there's not much those landlords can really do about it because everyone's in the same boat. So commercial landlords who've had it really easy for many, many years, typically a very passive income because usually the tenant takes care of the building and the maintenance and the insurance, suddenly for the first time ever, they've not got their rents. And also many businesses tragically are going out of business. So we're seeing lots of shops and restaurants and bars just closing down. And what about offices? I'm actually filming in what used to be the Property Investor Network office. We've now downscaled to a much smaller office because we don't need all this office space. And I know we're not the only company who are doing this. In fact, many businesses have realized that, you know what, do we even need an office? People prefer working from home. There's some great technology now. You can see what people are doing. We can all communicate together. So there's been a real change. What COVID-19 and this pandemic has done, it has speeded up what was probably going to happen over 10 years, and it's made it all happen in 2020. That's why this housing market update, November 2020, is so important, because we're on the cusp. In October, we saw an end to the furlough scheme. The government were talking about extending it. But what this means is many people who were expecting to go back to work have just been told, sorry, we're not going to take you back. Look at the bar and nightclub industry. You know, you have to shut by a certain time. There's curfews coming in. This means that the business has just been killed for some of those industries. So we're going to see this recession, unfortunately, getting worse. And what that means is there are going to be people who have had property prices go up and up and up. And actually, a lot of people are saying, hey, now's a really good time to sell because we've got all these people wanting to buy. There's going to come a tipping point, a point where prices are just too high, where people think, actually, the economy is not good. This is not a good situation. People are going to stop buying. If the market comes down, when it comes down, banks are probably not going to want to lend as much. That means there are going to be lots of sellers who are more open to creative financing strategies. If there are just not buyers around, they want to get rid of a property, they might be open to things such as purchase lease options, exchanges with delayed completion, and vendor finance. Strategies, most of which actually come from the commercial sector, but are going to be very valid in the residential. So now is going to be a great time for you, as long as you know what you're doing, to take advantage of this once in a lifetime buying opportunity. We are never going to see an opportunity like this. Commercial property is going to come crashing down. Residential property is going to come down, not as far as commercial, but it's going to happen as well. And what this means is, while most people are running for the hills, not knowing what to do, for those of us who are educated, those of us who are ready, it's going to be a great opportunity. So I've got a couple of suggestions, things you might want to do. If you have equity in property that you want to use to buy further property, my suggestion might be you might want to release that equity as soon as you possibly can. Sometimes people make a mistake. They hold on to equity thinking, well, I'll release the equity when I've got a great property to buy. And then if the market turns, not only does loan to value come down, which means you can release less money, but if banks change their criteria and freeze up, it might mean you can release no money at all. And I saw this happen in the last crash. We had clients, we said, look, get your money ready. No, we'll wait. And then something changed and they weren't able to access this money. And it'd be a real shame to miss out on this buying opportunity. So if you've got funds that you want to use, get them ready so you are ready to move quickly. If you're not using your own money, if you don't have your own money, there are creative financing strategies which you can learn about. I've done other videos on YouTube which you might want to watch, which are really useful, showing you how you can use these creative strategies so you don't have to use any of your own money. And I believe, although these strategies only work in certain circumstances, because there are 5 creative strategies, usually at least one of them will work on any property deal as long as it's a good property deal. What do I mean by a good property deal? Well, it's got to have enough profit. It's got to have enough cash flow so that it gives you an income, but also there's enough to pay whoever or wherever you've got the borrowed money from. That means there's no limit to the number of deals and the size of deals you use if you're using creative finance strategies. So I wanted to give you a little bit of an update, and that this little boom has lasted longer than everyone has expected, but I don't think it's going to last very long. And you just need to get ready to make sure you can make the most of the UK property market crash 2021. That's what's going to happen. I'm telling you right here and now. You can come back and watch this and comment later on if I was right or wrong, but that's what I believe. That's what most of the property people who know what they're doing in property believe as well. That's why the government are doing all these incentives, just to try and keep the property market up, because they are so desperate. That's why they're trying to kickstart the economy with this build, and do the changes to permitted developments. They are desperate to support the property market. They're doing everything they can, but I don't think it's going to be enough. So that's pretty much it for the housing market update November 2020. I do hope this has been useful for you. If it's been useful, please do like this video and also maybe subscribe to the channel. Click the bell so you get notified when we bring any other videos out. We bring a couple of videos out every single week, and I've got a whole load of videos with all the strategies you need to understand about how to be a successful investor in the UK. So as ever, I encourage you to invest with knowledge, invest with skill. Click on the like button, watch some of the other videos, and look forward to sharing more valuable content on this YouTube channel.